Welcome to TradeTheNBI.com. This is Jonas Reporters for the 6th of January, and well, we popped up to those new highs, but started to fade a little bit late, and then we had our opening gap down here in the morning. Not a surprise from what we saw from the 5K ending the day. We also have more of the turmoil going on in overseas, so that's going to create a little bit of turmoil. Something we expected was a potential. We've had this declining shakeout too, even though we've been in pretty decent setup overall. We had the cyan though move above green just temporarily here on the daily, but we have a complete reset of steel. So, but as long as the steel stays below negative 13.5 or down in that range, you've got some potential short-term buyers, but they're just going to hold off until they know that things are safer, because things could escalate very quickly. NASDAQ still a little bit stronger because, look at that sign, is well below red. So overall, it's just a matter of we've got just lack of buying was what really created that decline, because short-term buyers are just pretty much eased off, and no one from the midterm and long-term range is even interested, because until they know that things are going to relax. Obviously, when you have a government putting out a price on the head of the president of the United States, that's a provocation, and that's always frightening for markets. Euro right back up in the ranges. We knew that we had this complete reset here of steel, and that was about to pop back up. So there's a bit more movement back to the euro, a little bit safe given the political turmoil. And so a lot of this is nothing really to do with where economic growth or anything. This is more about fear factor for general markets, and that's why oil spiked too, because if the Iranians decide to attack the Strait of Hormuz and that, so this may be an aberration given what's generally going on, though we've been seeing extreme bullishness from oil anyway back from well over, a couple of weeks back here at the beginning of December of last year. So within line, probably not sustainable if things ease off, but that could be a little while before tensions are quote-unquote soften. We knew that gold was going to react stronger to it, and gold has been in this push ever since, coupled with the potential of growth in the U.S., inflation, oil rising. All those bode well for gold and commodities in that sense, because it's a bit of a safe haven in the uncertainty. So we saw it as of Friday here, the weakness that was developing. We came down from it, things evened out, came back up through a good portion of it, but as the trade progressed, it was still mediocre to soften. By the end of the day, it got even softer, and then we ended up with more sell signals even as we were approaching the end of the day, and so the gap down here, significant as it was, not unexpected given what we saw from the, in fact, it's probably more modest than we might have expected, and that's just because while it's scary, it's not the end of the world, so to speak. So we'll see how those political turmoils weigh out, because I think that's going to be the weight of the market. And as soon as there's any sign of relief, or if there's just really good news, the market may start to push back up to it. But if there's any additional conflict in that, I think that we can see some serious pullback, and we know there's plenty of range for the market to come back into, going all the way back to the positive extremes that we had all the way back to here down to 31.41. So good 60-70 points, which wouldn't be that big a deal, but it's got to get filled anyway. And sometimes there are good opportunities when you have this kind of crisis mentality going. Fear is an interesting thing like that. It's just like greed, but fear tends to be stronger, so you end up getting much more severe declines. So should anything break, I think that would be the first expectation for us to see. But overall, I think that we're just going to have to watch what short-term buyers do from our shakeout, and we'll see that in the short-term charts and in midterm ranges, so it shouldn't be too hard to digest that information. As always, though, if there's anything relevant, I will certainly put the charts up. It's a holiday here in Italy, so be out and about exploring the opportunities of a holiday here in Europe. The Befana, not something I even knew about when I was in America, but here celebrated with everything being closed. As always, though, trade well. We'll talk to you later.